Imagine waking up on a seemingly ordinary Monday morning. The sun rises, traffic hums softly outside your window, and phones buzz as usual. Yet something feels different. You reach for your wallet and open your banking app, but it won't load. You try again. Still nothing. Nearby, the ATM screen shows an out-of-service message. Confused, you hear the store clerk say the card machine isn't working either. Checking the news, you see a breaking story. Major banks have temporarily suspended all operations. At first, most people assume it's some technical glitch, a cyber attack maybe. But as hours stretch into days, a quiet realization begins to sink in. The lifeblood of modern civilization has stopped flowing. Trust in our banking system has frozen. We often say money makes the world go round. But in truth, money is just a language. The real engine behind it all is trust. And when that trust vanishes, everything we believe is solid begins to dissolve, almost like melting ice under a warm sun. This is not just a story about finance or panic. It's about how fragile our reality really is and how close we are to seeing the truth beneath it all. When people imagine a financial collapse, they picture chaos, riots, and looting. But the first hours of a banking shutdown would feel very different. They would look like confusion, disbelief, and a faint hope that it's just a temporary glitch. The illusion of normal life would hold, at least for a while. People keep trying to swipe cards, transfer payments, and reload apps. But as failure after failure piles up, quiet panic begins to spread. Because most don't realize how fragile the system really is beneath the surface. To truly understand, we must remember, your money isn't actually sitting in a vault labeled with your name. When you deposit $1, the bank lends it out, invests it, and promises to have it ready if you ever ask for it back. This promise, called fractional reserve banking, is based entirely on trust, infinite confidence that not everyone will ask for their money at once. Think of it as an elegant illusion. Imagine 100 people each believing they own the same dollar. The bank tells everyone so, and for a while, this illusion holds perfectly. But what happens when it doesn't? When everyone asks for their dollar at once, the system cracks. And that's the fault line beneath modern banking. Now imagine that illusion shattering overnight. Within hours, commerce halts, payroll systems freeze, supermarkets suddenly stop accepting cards, ride-sharing apps can't process payments, rent can't be transferred, suppliers go unpaid, governments struggle to issue salaries, the gears of daily life start to grind to a halt. We often forget that less than 10% of all currency actually exists as physical cash. More than 90% is stored digitally as bits and numbers within bank servers. When banks go dark, that entire digital world freezes, and with it, the lifeblood of global trade and daily life. The ripple effect would not be limited by borders. In today's interconnected world, every economy is wired deeply to every other. Picture the first domino to fall. Panic withdrawals. ATMs would run out of cash within hours. Stores that rely on digital payments would have to turn customers away. Fuel stations might run dry as suppliers fail to settle payments. Within a day, logistics networks from trucking to shipping would come to a standstill. Suddenly, long lines stretch at grocery stores, not because food disappeared, but because no one can pay for it. Panic would shift from the digital realm back to the physical world. People would begin bartering goods instead of buying, hoarding essentials out of fear. Governments would appear on televisions urging calm and promising that systems are being restored. Deposits are safe, they say, and this disruption is only temporary. Yet history teaches us that every crisis begins with those reassuring words before the real challenges emerge. The truth is, the roots of financial fear run deep. Every monetary collapse from Weimar Germany to Lebanon and Argentina follows a pattern: disbelief, anger, and then desperation. When trust erodes, society trembles on unsteady ground. Consider Lebanon in 2019. Banks froze accounts abruptly. Lifelong savings vanished into digital voids. Withdrawals were capped, accounts locked down. The national currency lost over 90% of its value. Skilled professionals became desperate, reduced to begging for access to money they once earned. If that seems extreme, remember Lebanon's banking system was once called the Switzerland of the Middle East. It thrived on trust. The loss of that trust destroyed the entire foundation. Now, imagine this collapse not just in one country, but globally. This would be more than a financial crisis. It would be psychological. Money today is no longer metal or paper. It's belief. A shared story that one digit equals value, that one promise equals trust. History offers warnings. In 1933, during the Great Depression, thousands of U.S. banks failed as people rushed to withdraw their savings. Franklin D. Roosevelt declared a bank holiday, temporarily shutting the system to halt panic. Yet physical cash still existed in homes, so commerce slowed but did not stop. In 2008, the collapse of Lehman Brothers nearly toppled the global financial system. Central banks injected trillions to keep the machine alive. They called it liquidity, but it was really manufactured confidence, a mass act of faith in the system's survival. Those events were tremors. Today, the system faces an earthquake waiting to happen. There is no paper anchor left, no gold standard, no physical fallback. Everything floats as numbers on screens, dependent on code and trust. Think about a single point of failure. What if a cyber attack, geopolitical conflict, or technical malfunction freezes the entire network? We saw a taste of this in 2021 when Facebook, Instagram, and WhatsApp went dark for hours, disconnecting billions globally. Banks are not mere vaults of cash. They serve as the nervous system of nations. Governments depend on banks to issue debt, pay workers, and fund defense. If banks freeze, the state itself effectively freezes, a political earthquake with vast consequences. The Great Depression's aftermath gave rise to fascism. Hyperinflation in Weimar Germany paved the way for extremism. Financial collapse doesn't just empty wallets, it rewires power. Whoever can restore order after the chaos becomes the new emperor. And that is the most dangerous part of any banking shutdown. The race to rebuild begins immediately. The one who controls the rebuild controls the future. This race shapes not just economics, but the very nature of freedom and control moving forward. In today's digital age, there's no physical fallback. Money isn't cash in hand, it's numbers on servers. When those servers go dark, everything dependent on them stops. Fuel suppliers can't settle bills. Payroll systems freeze. The convenience of digital banking becomes a vulnerability. Cash becomes a scarce treasure once again. People hoard it. Barter systems reemerge. The old dusty bills regain value beyond face, as tokens of trust when the digital system fails. It's a fragile balance between modern convenience and ancient necessity. This tension between trust in digital systems and the vulnerability they bring creates a dilemma. The digital age's convenience masks a complex fragility that can unravel suddenly, exposing systemic risks few fully understand. Imagine the cascade. Fuel stations dry up, logistics freeze, hospitals struggle to pay staff. Our modern world's just-in-time systems rely on endless transactions flowing seamlessly. The moment they stop, a chain reaction begins. And the shockwaves wouldn't respect borders. In our wired global economy, a breakdown anywhere hits everywhere. This fragile web of trust, code, and data underpins the daily lives of billions. History shows us bankruptcy and reset are nothing new. But the scale and digital nature of today's risks make a sudden collapse much harder to manage. No physical backup exists to soften the blow. Now, let's shift perspective. The psychological impact of collapse unfolds quietly but deeply. In the hours and days after a shutdown, uncertainty grows, hoarding sets in, barter emerges, society shifts from digital dependence back to ancient practices of trust and trade. People begin to hoard essentials. The old ways of trading reappear. Goods for goods, favors for food, services for shelter. Communities become lifelines. The human element, trust among neighbors, starts to replace the broken digital system. This transition isn't immediate or smooth. It's messy and uncertain, but it's also revealing. Beneath the illusion of modern finance lies a simple truth. Relationships are the original currency. There lies the seed of survival and resilience. Communities would rediscover ancient systems of exchange based on trust, labor, and reputation. It's a cycle as old as civilization itself, rising again when systems falter. Though it may sound dystopian, it's also revealing. History shows us that collapses break systems, not humanity. Rome fell, but life continued. The Great Depression wrecked banks, yet communities survived through cooperation and trust. If banks shut down tomorrow, yes, there would be pain and loss, but there would also be adaptation. People would rebuild trust in smaller circles, family, neighbors, communities, finding strength in human connection. Governments would move quickly. Emergency decrees, bank holidays, and possibly even martial law might be enacted to prevent unrest. Central banks would print money to inject liquidity, hoping to restart the system's flow. But printing money to restore trust can backfire. Inflation rises like a fire, fueled by the very paper meant to cool it. Confidence cannot be created simply by more money. This paradox challenges every response to crisis. Digital balances would be guaranteed, loans suspended. But central banks might seize the chance to introduce central bank digital currencies, digital cash fully controlled by the state. They call it modernization, but it means consolidation. The chaos of shutdown provides the perfect excuse for a new kind of control: programmable money, trackable transactions, and the end of financial privacy. We've seen this pattern before. Every crisis paves the way for greater centralization. After 2008, banks grew larger. After recent global events, governments gained more power over spending and movement. A banking shutdown would accelerate this trend towards total digital control. A world where every dollar, rupee, and euro can be frozen or deleted at will is a world where freedom trades places with convenience. It's the final evolution of money, from gold to paper to code, and from individual control to institutional dominance. Yet, amid this shadow of control, a quieter movement stirs. When institutions falter, people seek alternatives. Gold, cryptocurrencies, barter systems, and community trades would surge as trust shifts away from failed institutions. History shows that when official trust collapses, human trust reemerges. The black market becomes the real market. People rely once more on relationships, reputation, and face-to-face exchanges to rebuild value. If banks shut down tomorrow, it wouldn't signal just the end of transactions. It would mean the end of assumptions. Ownership, wealth, even identities tied to digital signatures become uncertain. The very fabric of our economic life would unravel. In the chaos, gold would become priceless, but finding someone willing to exchange it for paper money would be another challenge. Cryptocurrencies might spike temporarily, then crash as exchanges dependent on banks go offline. Panic would give way to improvisation. Local stores might accept barter. Farmers trading produce for fuel. Communities would rediscover trust systems based on labor, reputation, and mutual aid. It may sound dystopian, yet beneath the illusion of modern finance, humanity has always relied on one constant: relationships. That is the thread holding the fabric of society together when all else falls apart. History teaches us that collapses destroy systems, not people. Rome fell, but its citizens lived on. The Byzantine gold coin vanished, yet trade endured. The Great Depression demolished banks, but communities survived by cooperation and trust. If banks shut down tomorrow, there would be pain, chaos, and loss. But there would also be resilience and adaptation. People would rebuild trust in smaller circles: family, neighbors, and communities. In such moments, humanity becomes the currency again. This isn't speculation. Starting in 2023, regional banks in the U.S., like Silicon Valley Bank, collapsed within hours, not through lines at branches, but by viral panic online. Billions were withdrawn digitally faster than regulators could respond. The fragility revealed is real and ongoing. It's worth asking, what if the panic doesn't stop next time? What if a coordinated cyber attack, geopolitical conflict, or technical failure freezes the entire banking network for days or longer? The risks are not overblown possibilities, but real threats to global stability. Banks don't just hold money. They underpin entire nations. Freeze the banks, and governments freeze too. The consequences ripple through society and politics in profound ways, shaping the future beyond economics. So what happens when the banking system shuts down? The world doesn't just stop, it wakes up. It ends one illusion, the illusion that money is certain and stable, to reveal another truth. Money is faith, a collective story that binds us. Every civilization believes its system is unshakable. Rome did, Britain did, America does. But history reminds us that permanence is the greatest myth of all. Collapse is inevitable, and rebirth follows every time. The world ends for a while, then begins again. Different, often smaller, but profoundly more human. The collapse of banks might close a chapter, but it doesn't end the story of human resilience and creativity. As we look ahead, the question isn't just what will happen, but what will we choose to build? Will we accept deeper control for safety, or seek new ways grounded in community and trust? The possibilities are both daunting and hopeful. The day banks shut down, the world changes forever. But it does not end. It begins again. If you found this exploration revealing, our next video dives into the future of digital currencies and their impact on privacy and power. Stay with us for that journey. For more insights like this, explore our full playlist on economic resilience and financial history, available right here on our channel. What was the most surprising truth about banking shutdowns you heard today? Share your thoughts and questions in the comments below. Let's talk about how trust shapes our world. If you want to stay informed on these essential topics, please subscribe. We appreciate your curiosity and your commitment to understanding complex realities.